Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the NZSX50 over the previous week. Just remember that this is for educational purposes only, certainly not intended to be personalised financial advice. If you're looking for that, you do need to go and have a chat with your own financial advisor. So let's take a look. Right, I've got the NZSX50 up here on the screen, and you can see here that that last week was a positive week, which is great. In fact, we've had a couple of positive weeks in a row, which is an encouraging sign. And I've spoken of this before, so I've got this over the 5-year period, that basically it does look like we're into a little bit of a range bound area, and I've talked about this numerous times. So we had a little bit of pretty much a run up since the end of October 2023. Obviously we've had a few blips along the way, but we've had a relatively, I wouldn't say super strong, but a consistent probably run up along that time frame until now. And now it looks like it could be a little bit range bound. Just mentioned it before. We've been seeing, I've spoken of that before. So you can see here where my dotted line is, that's sort of where we're getting a little bit range bound. But the encouraging thing is as well is, so that's where the tops are sort of around that 13,200 level, but also we're sort of seeing the market, if you like, have a sort of a line of support. It's a little bit sort of hazy, but it could be around the 12,500 mark, and it's only hindsight that really does let you know these. I mean, whether it's shot up and it's now at that 12,700. Again, only time will actually tell us, but there's certainly a few touch points at around that level. So that can be a good positive sign, because what we're seeing is that the lows are actually getting a little bit higher, which is great. The highs are not making new highs, but the lows are certainly not getting any lower. Hey, whether that coils up and ends up going the complete opposite, only time will tell. But at this stage, yeah, the market's just sort of doing what it's doing. Another thing that I like to look at is to see how much volatility or how much risk is in the market. So what I do is I take the ATR, and I've got this over a 21 period. So let's take that figure, 221.51, and divide it by where the share currently is at the moment, 13,074.51, times that by 100. So basically we've got about 1.69% volatility in the market. Also mentioned that I am happy to keep looking at opportunities in the market, providing that the volatility stays under around 5%, which it well and truly is. So that's a good sign. We take a glance down the bottom here to the volume. There hasn't been a lot of volume of late. We saw quite a big strong sell-off at the middle of February last year. But yeah, we're not seeing too much more since then, too much more activity since then. We'll put our moving averages on and just see how they look. So I always use the 30 exponential moving average. Let's have a look at that. As you can see there, the share or the main board, the indices, is trading above that on a weekly basis. So that is a good sign. We'll just have a quick look on the 1 year, because it changes it to a daily range for me. And basically up until today, the market has been slightly under. Again, it's not a super huge concern, but I do want to see obviously the main board trading above that 30 period moving average. That to me is sort of my indicator. But you can look at historically that when we have a big run up away from it, it does tend to pull back. Okay, so if the share moves up away from that moving average, tends to pull back, will then go again, come back. Okay, and that's really what we've been saying. I mean, it doesn't follow that line implicitly, but it does tend to follow it. So we're not too concerned there. Let's also put on the 15 period moving average and see how that looks as well. So on a daily basis, it fell down below that 30-day moving average, and it's now looking like it's starting to cross to the positive side. So again, we will just keep an eye on that. And like I've said before, I like to look at my trades, evaluate them on a weekly basis, but I confirm basically my execution on the daily chart. So for me, looking at this, I mean, it's the 15-week moving average is certainly through the 30, and that to me is a very, very good sign. Okay, so whether we're going to break through that sort of 13,200 point level remains to be seen. The market's trading above it, so that is positive, and that certainly could help. Now, one thing I'm going to show you as well is I'm going to show you a couple of different ETFs, so exchange traded funds. So if you're thinking, hey, I'm really not sure, I want to invest in the New Zealand market, but I'm not sure what stocks to actually invest in, there is two ETFs that you can trade into. Okay, so the first one is NZG. It's provided by a company called Smart. And what this one does is it actually mirrors that of the main indices. So some of our bigger shares, if you like I'm doing a review on Auckland Airport later in the week, that's one of our higher exposed shares, if you like. It's by capitalisation, it has the most exposure to it. So this is what this NZG fund does. It pretty much has exposure to the main 50 companies on our board based on the capitalisation index. So it will be weighted more to those higher capitalised index shares, those higher valued shares, than perhaps some of the lower ones that we see. So, some of the lower ones, gosh, off the top of my head, might be Kathmandu, for example. That wouldn't have very much exposure at all. But it gives you a way to give exposure to the main board without having to go and individually select shares. So that's this one. You can see here too that that's been quite range bound. Sort of around that 2,600 level. We've had a couple of touch points in the last few weeks. So, and because it's trading above those moving averages, who knows, could break to the upside, which again would be a great positive outcome. The next smart share or ETF that I'm going to show you is FNZ. And again, it's provided by a company Smart. And what this one does is it actually has a 5% cap into every share on the NZSX50. So if a company is having more exposure than 5%, which our top ones do, there might be 15% in some of our top strong ones, 15, 12% even. This smart share being FNZ will limit that to 5%. Hey, some of those lower companies on our main board might only end up having 1 or 2% exposure, but those heavyweights, if you like the Sparks as well, they will only be limited to 5%. And this is quite encouraging when I look at this chart here on a 5-year basis. You can see that last week it certainly sort of popped out just above where it has been trading in the last few weeks, and it's really sort of hit the same level that it did back in January 2023. So that's sort of how long our market's been meandering sideways for. This next little candle is just for the market being open today, which is Tuesday. Trading above both of those moving averages, really good sign. They're both pointing up. Again, a good positive sign. Let's take a look on the daily. And you can see here as well that that we've had a very strong performance actually on a daily basis, that it is certainly rising. A little bit of breakout with volume. Again, that is something that's quite positive. So I hope that's helped. That just is FNZ. And like I just said, that's a ETF. So it means you don't have to pick the individual companies, but it gives only a maximum of 5% of your capital, 5% exposure to any one particular company. So that could be a consideration if you're not sure where to start. But as always, if you are unsure and you do need help in your share trading journey, reach out. Happy to help, happy to chat through some strategies and ideas that may work for you. Again, they're only strategies and ideas, not personalised advice. Okay, until next week, take care.